No tax on tips is not quite what it seems. So if you are a bartender, server, or know a bartender or server, please share this and make sure that they understand this moving forward. Your company will still withhold all necessary taxes from your check based on how much tips that you claim. Your taxes will still be withheld from your paycheck. So if you claim $250 for the week, you will be taxed on $250 for the week. Now, if you're a cash and carry server and you get to leave with all of your tips at the end of the night, the restaurant pays you your cash at the end of the night. This doesn't quite affect you right now. It will when it comes to tax time, but not right now. If all of your credit card tips go to a paycheck and your company gives you a paycheck with your tips on it, this does affect you. You will still see your taxes removed from those tips. So you're probably wondering, going, wait, Bryson, I thought it was called no tax on tips. What's this about? Right. That's when things get a little bit misleading. And this is where things split if you work for a restaurant where you get all of your credit card tips at the end of the night, or if you get paid your credit card tips on a check. Pay attention. We're going to start with the very few that are left in the industry that get to walk out of the restaurant with all of their tips in cash at the end of the night. The restaurant pays them all of their credit card tips in cash, and they walk out and everything is square. We're going to start with them. You being the upstanding server and citizen that you are, you claim every single dollar that you make, both in cash and in credit card tips when you walk out of that restaurant at the end of the day. And for simplicity's sake, let's say you work in the state of Georgia where you get paid $2.13 an hour from your restaurant. At the end of the 2-week pay period, you have told your restaurant at the end of each night you have made X amount of money, and that total comes to now, let's say, $1,000 over 2 weeks. You have worked 40 hours at $2 an hour. So that is $80 that the restaurant owes you. So your restaurant puts all of that information into the system and they get ready to cut your check. Well, here's the deal. You've made a total of $1,080 for the 2-week pay period. You already have $1,000 of it. So the restaurant really only owes you $80. But the restaurant has told the federal government that you made $1,080. So you owe taxes at that point in time on $1,080. And being the restaurant has no choice but to withhold your taxes based on that total income for that pay period, your paycheck is now zero. Now, the real unfortunate part is that $80 that they took from your check, essentially making it zero, does not cover your entire tax burden. And you now essentially owe the federal government more money. Now, multiply that by 26 pay periods, 52 weeks divided by 2. Now, come tax time in 2026, you'll receive your W-2 from your restaurant that says that you made a total of $27,040, $26,000 in tips, $1,040 from them for your hourly wages. Now, pay close attention because this is where things get tricky. Assuming this is your only job and only source of income when you file your taxes in this hypothetical situation in 2026, you're going to tell the IRS that you only made $27,040. Now, this is where no tax on tips comes into play. As of this year, you are now allowed to deduct $25,000 of your tips from your taxable income. That means instead of the federal government going, hey, you owe us taxes based on $27,000, they're going to say you owe us taxes based on $2,000. Now, here's the kicker. That only applies to federal withholding. You will still pay all your taxes into the other tax areas, Social Security, Medicare, all that. I know it's hard to understand, but we're going to do a little more simple math to break it down, all right? So let's use the exact same scenario, but for the year 2024. When you filed your taxes in 2025, you told the federal government that you made a total of $27,040 in 2024. Federal government looks at you and says, if you made $27,040, you owe us $6,000. You look back at the federal government and say, wait, I've been paying taxes all year. That's why my paychecks have been zero. Feds look back at you and say, we appreciate the $1,040 you gave us over the year, but you still owe us another $5,000 and we would like that. And there you go. So this year, the hope is for the reverse, where the feds look at you and say, hey, you gave us too much money. We need to give you some back. Now, mind you, that's only on federal withholding, none of the other tax. And if you're cash and carry, the chances of that happening are very slim. But if you're a credit card to check, it's very, very possible. And so let's talk about you. Now, in this hypothetical, we're going to say that you don't make any cash tips whatsoever, so you're not claiming any cash tips. All of your tips are going directly to card, and your restaurant is paying that directly to you. So they are taking taxes directly out of what they pay you. And for easy math's sake, we're going to keep the same math as the last person, where you make $1,000 in tips and $40 in hourly pay. Your company will then go cut you a check for $1,040 minus all of the taxes that you're supposed to pay, including that federal withholding. So at the end of the year, when you go to file your taxes for the $27,040, you'll get to deduct that $25,000 and tell the federal government, hey, I overpaid you. I paid you enough taxes to cover $27,000 when I really only should have given you enough to cover $2,000. And the federal government should go, here's the excess back. Thank you so much for your lending us the money. Now, that $25,000 is the limit. You can't deduct more than that $25,000. A lot of you servers and bartenders and everyone out there makes more than $25,000 in tips a year. So for every dollar you make over that $25,000, you will have to pay all of your taxes on that. So what should you do? If you are a cash and carry server, make sure you are still putting money away to cover taxes at the end of the year, because there's a chance you will still owe money at the end of the year. And if your credit card to check, nothing. You're gonna still see taxes taken out of your tips. So just don't freak out when you see it. And most importantly, make sure you deduct that $25,000 come tax time. Because if you don't, it doesn't do you any good. If you have any comments, if you have any questions, if it doesn't make any sense, please don't hesitate to ask. I know this was a long video. Thank y'all for sticking around, but this needed to be discussed.